Stocks are dropping again. We're looking at the big board now. Stocks down about 50 on the Dow there, and they're down on the tech-heavy NASDAQ, and they're down on the S&P 500. And guess who we have here? They're on a smidge on the S&P 500. But we've got Dr. Paul Vigna here. Thank you very much.
Mr. Simon Constable, happy to be here. How are you today?
Very, very well. A lot happening today, right?
A lot happening today. The big thing was at 2 o'clock, the FOMC minutes.
That's the Federal Open Market Committee. That's the policy-making arm of the Federal Reserve,
and
our central bank.
These are the minutes of the June meeting. And you really should not have expected much out of them, because after the June meeting, you had Chairman Ben Bernanke do his press conference, one of the new things they do now. So you really, you knew what the Fed was thinking back in June. But the market loves to read the Fed tea leaves, so they're holding out hope. Maybe something would be in the minutes that would say QE3. Well, there really wasn't anything that said QE3. There was the usual...
That's the more printing money thing to stimulate the economy, which is very good for the stock market, typically.
Very good, which is why the market loves it so much.
Yeah.
Didn't get any strong sense that that's the direction the Fed was leaning in from these minutes. You saw stocks drop sharply. The Dow was down almost 120 points at the low. So a big drop right in the middle of the afternoon. You can see they whittled that down a bit.
They really sort of dropped massively.
You can see they whittled it down to get down about 50. Now that is interesting. 5 days in a row the Dow has been down now. So you're now looking at a pretty significant downdraft.
So what about economic outlook for the second half? Are we getting any sense of what the Fed thinks of that?
The Fed, look, they always give you this on the one hand, on the other hand thing. Right?
Two-handed economist. We want a one-handed economist is what we want.
Yeah, on the one hand, they're kind of worried. But on the other hand, now again, you have to remember, these are minutes from June. Before the June jobs report. Maybe things have changed then. But at least back in June, they were relatively sanguine about the odds of the, there's a slower growth, but still growth. So they're relatively optimistic.
Okay.
Relatively.
Well, relatively. But that was June, so don't...
Now, maybe things have changed.
It's important. I've got to ask you about this. So people who are worried are bond market investors, and they seem to be very, very worried right now.
Yes,
explain why.
Extremely worried. Well, look, if you think that the world's going to hell in a handbasket, where are you going to go? You're going to go to one of the few safe havens. They are fewer and far between. One of them is the U.S. Treasury market. U.S. 10-year yield today slipped briefly under 1.50. Right now it's about 1.51.
That's 1.5% per year for 10 years.
Per year for 10 years, right.
That's not a very good return. But
there was an auction at 10-year debt today. After that auction, strong auction, went down to, I think, 1.47 briefly. So, look, 1.51, 1.4, very close to record territory. Part of that, of course, is the Fed keeping interest rates low, but a big part of that is also investors saying, I don't trust anything out there. I don't care.
I'm scared. What they're saying is, I'm scared.